For now, though, we're still unpacking why SARS's AI-enhanced audit capabilities are wreaking havoc on taxpayers, and we're doing so with Jashwin Baijoo. He's the head of strategic engagement and compliance at Tax Consulting SA. Jashwin, under what conditions can SARS extend the 3-year limit for issuing additional assessments, and how does this process comply with taxpayer rights?
Yeah, so as mentioned, it's a discretionary extension, and where there's suspicion of fraud, misrepresentation, or material non-disclosure of facts. And factually speaking, this is actually encapsulated in our tax laws, meaning that SARS are at liberty to do this where the suspicion is there and they have detected a risk on the taxpayer compliance profile.
And this is a question that I'm sure many listeners would like to ask. What are the procedures for taxpayers to challenge AI-enhanced audit findings? And of course, then how does SARS manage these disputes?
What would happen is, the first thing is SARS gives taxpayers an opportunity through the request for relevant material to discharge the burden of proof. Now, what we often see is, because your average taxpayer does not continuously check their e-filing and, quite frankly, does not continuously check their personal emails. As we all know, I mean, as professionals, we check our business emails, but we don't day on day, hour on hour check our personal emails. And that's quite often how these requests for relevant material are missed, and their deadline also missed. When that happens, SARS proceed with the finalization of audit based on information available and estimations from SARS's side. Once that audit finalization has taken place, it really goes one of two ways. Additional assessments are issued to give effect to the adjustments to gross income by SARS, and penalties are imposed, as I said, up to 200% of the capital tax liability. All of this will be found in the calculation table on the additional assessment. Where a taxpayer is aggrieved and has merit for it, they may then enter into the dispute process with SARS, which can be preceded by a request for reasons, depending on how clear SARS are in their letter of audit findings. And where it's a case of the taxpayer affirms that they have been slightly delinquent in their disclosures to SARS, and now at this stage with the snowballing of not only the debt, but also the penalties, may then engage SARS in debt relief negotiations, which include a payment plan, or alternatively, where there is sufficient merit and financial constraints, a compromise of tax debt application, which is a legal application and negotiation process typically entered into with SARS represented by a legal representative, and that is to write off a portion of the tax debt, and in some instances, the interest and penalties in their entirety.
Well, in closing, what future enhancements does SARS plan for AI in tax administration when we look ahead? And how might this affect tax compliance and enforcement moving forward?
So we have it on good authority from individuals within the Commissioner's office that the current state of AI is just the start. It is, for SARS, a 3 to 5 year project, which will continuously see enhanced AI systems being implemented across all tax types, all tax functions, and all taxable or taxpayer entities, meaning linked entities, which is something they already do, but on an Excel sheet. Now, once AI gets to that level, that linked entity report is going to be far more legally enforceable, and it is a case that AI will give SARS the power without requiring the additional manpower to enhance their collection strategies and increase pressure on non-compliant taxpayers to pay their dues and become wholly compliant. And we've seen very recently with our celebrity chef that cases of non-compliance, cases of fraud, well, SARS is making an example, and to prison it is.